Hey, everybody, welcome to the show. I'm Hans Albrecht, of course, a 15-year options market maker, and then a decade after that running a whole bunch of income funds, downside black swan funds, a little bit of everything, managing almost $1 billion in option strategies over the years. So welcome. I'm here to help you and guide you and teach you. But as always, the disclaimer, this is for educational and information purposes only. If you're okay with that, let's keep going. We've got pretty much gangbusters start to the first full trading week of the year. We can see financials really blasting off. One of my very biggest positions, biggest pushes this year has been Goldman Sachs ever since the sort of mid 500s. And we can see how this sort of AI adjacent stock, as I like to call it, just keeps going and going, right? $80, $90 just in the last couple of days. Financials doing really well. We've had some great news lately, right? We've had 2 quarters in a row averaging 4% GDP growth. That is not anywhere close to a recessionary signal. And I understand that a lot of it is in infrastructure build and AI, but guess what? That's the new world. And the very exciting part about that is that it is spreading to other areas of the economy. So yes, the overall multiple in the market is a little bit on the high side, 22, a little over 22. But if you back out some of the big names in there, you've got the rest of the market, as we call it, the S&P 490, trading at around a 15 multiple. So this is in keeping with my roaring 20s outlook, which is that the big ones can do fine. Maybe they pause a little bit here as we start to see a little of the benefits spread to the rest of the market. I think that's very exciting. So I think it can be a leapfrog where I'm not expecting, I think AI is still massive. I think the big stocks, the hyperscalers still have a lot of power, still have all the levers, very bullish on Google, Microsoft, Apple. I think we have to expand our horizons. So that's what makes this year, I think, is going to be very exciting. We're going to have a lot of disruption, though, right? This is where enterprises start to adopt AI. They start to either do it well, don't do it well, or maybe don't do it at all. And there's going to be repercussions to that for companies that sort of get sideswiped by not doing what they need to be doing. So it's going to be a year of discovering from an enterprise standpoint what to do with these amazing tools. And we can see the S&P is really starting to push up. I think we're going to have a little bit more volatility because of that disruption, a very nice run up as people realize that the inference phase is very much the part that is underrated, right? This is not training anymore. It is now constant gears turning, never ending compute needs, and this starting to play out in ways through agentic AI, et cetera, as ways for companies to monetize and actually make use of all this stuff, right? So that's the amazing part that people really are perhaps underestimating. But again, I will admit that it is not predictable. We don't know who's going to figure this out. But what I've maintained over the last 6 or 7 months is that there are going to be companies that I am very sure are going to figure out how to do this. And they're a little bit more on the side of financials where these companies just shift papers from one side of the desk to another. They're going to find productivity gains. They're going to find ways to cut costs. Their margins are going to go up. And of course, they're going to benefit in Goldman's case and JPM's case. They're going to benefit from IPOs and deals and all that stuff. So lots of great stuff there. The data names are very interesting to me because while semiconductors the overall have been doing well, I think it's going to be competitive, right? Are TPUs going to be important? Are we going to have bottlenecks from a lack of memory? Are we going to have problems in terms of the build out specific to semiconductors? Maybe, we'll see. But if there's one thing I'm quite sure of is that we're going to be creating data on a level we've never conceived of before. And so the stocks that are really the go-to, the Palantirs, the Snows, the Datadogs, these are the companies that are going to get called, help us now, especially as that very low enterprise adoption as it is right now starts to expand very quickly. The phone is going to be ringing off the hook, I believe, for companies like that. And then, of course, there's the infrastructure build out, the copper, the companies that are really going to be a part of this retiling of the world, fixing up dilapidated infrastructure, creating new infrastructure to handle data centers and all the build out that is required in this AI arms race that is fully supported by the government. So you have to think of it as being very supported from every single angle, and that makes for a very powerful investment theme. And so I think data centers do well. I do believe that AI kind of moves a little bit more to the edge, not only to the edge, but it's going to move to the edge. So there may be opportunities there in the smaller chip makers, the Qualcomms, names like that are going to benefit from this expansion of IoT, Internet of Things, et cetera. And I think stick with us with either Turbo Trader or Leaps Trader. We have some amazing programs to get folks involved and following my portfolios, live classes, et cetera. But we can see here a little bit of risk on today, right? We see ARK overall starting to pop a little bit. And we're even seeing in some of the areas that have been hit a little bit harder in terms of the power generators popping up above. I like to see that. A little bit of a move above here where they've really struggled for a while. Iron and Cypher, a couple of my favorites there. We're going to need more power, right? This is not, there may be some efficiencies at some point that impact the whole power theme, but for now, it is just insatiable demand, as every CEO has said, and I don't think they're lying. And I think they're holding back, in fact. I think the hyperscalers are holding back some of their very best models that are just infrastructure can't handle those models. We will continue to see some of these areas do well, even Bitcoin doing well. I'm a little bit more on the Ethereum side of things. If we look at the dashboard here, we can see this is Turbo Trader Pro. Members get a login for this. They get their own dashboards to keep track of things, filters through thousands of stocks to give you ideas on income, upside, explosion trades, keeping track of all the important themes and sectors. Here's the AI portfolio, lots of great stuff in here, even bearish income trades. So income and strategic upside. Look at Taiwan Semiconductor. This has been green for quite a while, arguing for turbo upside, which is really where we grab that extra upside. Look at that, boom, absolutely massive. ASML has been in there as well. Snow has been a little bit on the cautious side, right? So we have some bearish income here. We want to see things develop a little bit. This tool can help you stay on the sidelines, not get too excited to get caught up in the noise and to get into things that really aren't getting going yet. But I see retail do that all the time. So part of the idea is that really this is keeping you on side, because half this battle, make no mistake, is staying out of trouble. And the other half is finding great trades. So we've got our gauges up here, everything pretty much green, looking good. And then I love to look down into the alpha momentum area. We can see communication has been doing very well. I'd like to see it act a little bit better on the weekly. We see even consumer discretionary come on there, right? Lululemon, stuff like that. If the economy is strong and basically spending is still quite healthy, I understand there's a very lower layer that is struggling, that is in a recession, but there are a lot of people who own stocks, who own homes, who have a lot of equity that are spending, and the data supports that. So that's returning a little bit to the discretionary side as we see a little bit of a rotation out of the sort of usual suspects of the NVIDIAs and maybe some of the MAGs. We see people move into other areas of the economy that have some value there. Stocks that have really been ignored for quite a while. We've seen growth versus value absolutely diverge in massive ways. Perhaps we get a little bit of a reversion to that. Here's a great chart from Goldman. Look at this. Europe value versus growth really outperforming. So what's happening in Europe, because they don't have all the hyperscalers, the top tech, is really people have been shifting into some of these value areas, whereas US value to growth has really suffered. There's some opportunity there, right? I'm not saying these immediately converge, but there's an opportunity in a market that is actually quite expensive. Even after the sort of convergence of the rest of the world to the US, they had a great year. A lot of other markets had great years last year. But look, the valuation is still quite high in the US. But again, look under the hood, a lot of areas that could potentially do well from this broadening out of AI and the benefits of productivity, et cetera, into the rest of the economy. That's why this number here isn't as important. You've got an incredible amount of value within that stack there. I think there are other opportunities in other parts of the world. Nice opportunities is underneath that sort of usual suspect group where there's a lot of upside. You've got the healthcare, you've got areas that people are spending, the build out, you've got, of course, industrials, you've got materials. We've seen gold do well, we've seen copper do well, we've seen silver do well. These are the things that I can drop on my toe themes. These are real things. This isn't ideas of crypto coins in the air that might do well. This isn't tulip bulbs. This is things that we need right now. It's reality. And I think the market has shifted a little bit too. Look at how Caterpillar's done. People that make things, right? The Cornings, they make glass. Those are important for the build out. These things are important for the physical build out of what has to come over the next few years. There is no question. And I see people talk about, oh, cyclical. People are saying, oh, Micron is overpriced. It's a cyclical stock. They are completely missing the point. It is not cyclical at all. It was for many years. This is a need to have now. There's not enough of this stuff. It has nothing to do with cyclicality when you are retiling the world and rebuilding the world for this new phase that it is going into. You need certain things. That takes cyclicality for the most part right out of it. You just absolutely have to get more of these things. And I think that's important for people to remember. So in Turbo Trader, we have the Goldman Sachs. We're up a whole bunch on it today, which is, let's take a look here. Goldman Sachs. This is one of our really big winners looking for that turbo upside, right? So this wasn't an income trade. This was looking for a significant move, and the signal gave us that. And you can see here, we've got this expansion balance. So I have a couple things here that give me some idea on expansion, right? You've got this squeeze ratio. We're not seeing anything go on there. So I'm a little hesitant to get big on that sort of very high beta, no earnings kind of area. I do believe the mania will come. I'm very confident that the mania, we have a number of waves of the mania still to come. So this will be a very interesting place to look for soon, data center plays. Right here is what we're really facing near term, which is this expansion balance, which is going to be your smaller sorts of names versus kind of the broader economy, but in a way that sort of looks more equal weight, right? So we see very nice movement in here. Longer term, we need to see this improve just a little bit more, but the breadth balance is a very important one as well. This is going to be your sort of equal weight versus very broad. And we're seeing some very nice moves there. We've got a nice green today after a green yellow. So this kind of gives you an idea of where's that momentum going, right? We want stability. And sometimes we want momentum. I've never liked that. I ran $1 billion in these funds, and management was always telling me, listen, do more income. I'd say, no, we've got to maintain some upside. Otherwise, we're going to miss the boat. So you really want to have that holistic, balanced view of grab income when it makes sense, and then grab that turbo upside when it makes sense as well. So we can see real estate not really there. Information technology still spinning its wheels a little bit. I think you've got to look under the hood within information technology to really find some of those areas. Look at materials here. So materials, I want to see these industrials act a little bit better. But again, this is not meant to get you in on the first move. It's meant to give you durable trends, and that's very important in income trading. Make no mistake about it. This is not about looking for the highest premiums, people recommending all these 3 times ETFs to trade income on. That is really asking for, you better have your Costco size Pepto-Bismol at the ready, because trading options on those things is going to be quite the ride. In the meantime, we've got Tesla starting to make a comeback. Micron, of course, still looking really good. Western Digital, remember that memory shortage is real. These guys don't even care about consumers anymore. They're pushing all their supply into the big players, the big spenders, and that's where they're going to make more money. I want to see Datadog act a little better. If I see this, we've got the trend of our MTI here, right? If I see this sort of go yellow up, then I'm going to feel a little bit better about one of these trades. But for now, it's a little bit on the bear side, so I wouldn't get too excited about that. Let's get back to our list here. So just some final thoughts. We've got copper, very interesting. I'm not a huge proponent of crypto, but I do believe in the stable coin and the tokenization of everything themes absolutely play out at some point. There's no question that people are going to be coming for the Visas and the MasterCards and to try to mow their lawn and make that transactional layer much more efficient. Those guys make way too much money at what they do, and they're going to be under pressure. Some of the software, the sort of coding companies, really not acting that well, unfortunately. One of the names that I really like is Upwork. I'm looking for this to push up here, because I think there's going to be a lot of demand for their freelancer services, because they're higher end and people want to get on board with AI, and that's one of the places they're going to look to do that. So I'm not going to go over every single area today, but hopefully that gives you just a little bit of an idea. We see some bounce back in UNH. That's good to see for a change. It hasn't been the best healthcare name to really focus on. There have been better, but we see XLV spinning its wheels a little bit. We've got an income trade on that. And what works for you with income? Just stability and the passage of time, right? You're just waiting for that wonderful theta to just accrue over time. That's the nice thing about trades like that. As long as it's a relatively stable product, you just let it happen. GEV, Vernova, good trade in there as well. We're up on that. For me, I'm still just not interested. People ask me about Oracle. I'm just not interested. There's just so many. I have no doubt that it can get back up here, but there's so many great names to trade. Investors are much more sensitive to taking on debt and ROI in terms of what is AI going to pay off. And then, of course, fulfillment, right? So OpenAI is a big question for these guys. And that, again, goes back to our theme of really staying in the trades that are looking good and staying out of the ones that could get us into trouble. But beyond that, I think in the healthcare space, 𝐼RKG might look interesting for a little bit of super beta to the upside in areas like that, where you might want to, I think in healthcare, you're going to get those sudden headlines, right? Think of that as an area where you've got this headline risk in terms of those positives that could come in. Hey, we've done this in 1/10 the time. We're starting to discover important things. We're making gains towards disease curing and things like that. It's going to be really wonderful. And then, of course, Hood is one of my very favorite names. These guys are in all the right places. So a little bit of fintech in there, as well as that connection to crypto, which I really love. That's a name that I'm going to be adding to. Tesla is really just a little bit of a heartbreaker. Started to make new highs there, but I do like it as that sort of one of those premier, it's not a car company. BYD in China has now surpassed in sales versus Tesla's. Maybe they don't make much money, but they're not really the strongest car company. They're a good car company. They make money for a change on EVs, but really this company is about power generation, power storage. It's about humanoid. It's about the physical meeting AI, which I think is going to be a theme this year, whether it's the Internet of Things, which is sensors all around us, or specific larger uses, robotics, automations. Physical meets AI is going to be one of those themes that I think continues to potentially get attention, and we want attention when we look for things to trade and invest in. Durable themes. Okay, guys, so we'll catch you later. I'm going to do another video on the things ahead in the next few weeks that we need to be paying attention to, and we'll see you in that one.